Hey everyone, Patrick Jackson with Mann Mortgage here with this week's market update. Today is Thursday, December 15th, and it's about noon on the West Coast. And since I last spoke to you guys, it's been a busy week for industry news related to mortgage rates. So starting on Friday, we got producer inflation numbers, and those came in lower, but not as low as expected. So the markets, they didn't like it, but they recovered pretty quickly, which is good to see. Everybody was really looking forward to this week because on Tuesday this week, we were getting consumer inflation, CPI numbers. And then yesterday on Wednesday, the Fed was making their announcement of their newest rate hike. So the markets were all kind of holding their breath, seeing what's going to happen on Tuesday and Wednesday. So on Tuesday, we got the CPI numbers, and they came in lower than expected, which is great news. Like we've talked about before, the main reason mortgage rates have gone up is tied to inflation. Inflation comes down, mortgage rates should come down as well. So they were expected that the headline was expected to go from 7.7 to 7.3, and it went down to 7.1. And then the core, which strips out energy and food costs, which we talked about, that's the thing the Fed likes to look at most because that's what their policy can affect. That went from 6.3 to 6.0 when it was expected to be at 6.1. Month over month, some of the other details, shelter is still elevated, which we expect that to drop off as we get more and more data. That's a lagging indicator, so that means it's lagging behind real time. So we expect that to be helpful in the future, where right now it's hurtful for the inflation numbers. And so then that, on Tuesday, the markets like that, good inflation numbers, the markets are always going to like, and things went positively, but still there was a little bit of a breath hold waiting for Wednesday to see what the Fed would have to say. So let's move on to this one. So we knew the Fed was going to raise it 50 bips or half a point because that's what had been expected. That's what the markets had been communicated. So that came in as expected at 50 bips. Their statement, showed that they do expect the Fed fund rate to get a little bit higher than previously they had reported, at least with their prediction for right now. And the markets, didn't like that, but they shook that off. And then, Fed Chairman Powell gave his speech about a half an hour after the statement. At first, his tone was pretty hawkish, which the markets reacted negatively to. But then, he softened up as he went, recognized that inflation is coming down, that, it kind of indicated that the next hike on February 1st might just be a 25 bip. So we've gone from 3/4 of a point increase to 50 point or half a point. And now, maybe next one to a quarter. So we're tapering off, which is good. So the markets, kind of digested all that information and, came back and, last week we're at about a 6.28%. And this morning we're at about 6.13% average conventional across the country, which is great to see. We're getting closer to that 5 number. That'd be awesome if we can get down to there. But, it's not going to go down in one day, but slowly we've come off our high of about, I believe, 7.38 down to 6.13. So that's a point and a quarter. So, definitely off the high, which is all positive news for us in the industry and, any borrower that's looking to buy. And then, this is one reason this chart you guys have seen before, now updated, showing the new number. We're through this November number now. So in January, we'll get this December number. And again, this is an elevated number from month to month. So whatever number we get in December, which we expect to be lower, will be replacing this 0.6%. So if this comes in at, 0.2%, that will drop off, 0.4 from the core reading. So year over year, we'll go from 6% to 5.6%. So all head in the right direction. This is one reason we expect, plus that, that shelter inflation coming down, we expect inflation to keep coming down. The problem would be if, what we talked about before, often when they get inflation under control, it puts a hurting on the rest of the economy. We see job loss and things like that. Job numbers today came in strong. That's another thing I'm happy, the job numbers came in strong, which oftentimes would have a negative effect on mortgage rates in the markets. And the markets kind of shook that off today too. The job numbers were stronger than expected, which generally is a negative for my stuff, but it shook it off. So going forward, those are the kind of things to watch. Job numbers, if we see those start to pop up, unemployment numbers go higher, then that will probably, possibly help mortgage rates, because that would, make Chairman Powell and the Fed less emboldened to possibly continue to push on the rate hikes. If they start to see job losses go up, the hope would be that they would cool their rate hikes, which would have a positive effect on mortgage rates and so forth. So, that's something to keep in mind going forward. We need to watch those inflation reports for the next month. We need to look at those Fed meetings. But everything looks like as we go into that first quarter of 2023 into the spring, that, mortgage rates, hopefully are down in the 5s, maybe even low 5s. do a buy down, you can get even lower than that. So things are heading in the right direction. Fingers crossed that the Fed doesn't kill the rest of the economy when they do all this, but everything's positive. And then, over the holidays, if you have people in town that are looking to buy, keep this in mind. Compared to last year when rates were really low, it's a lot easier to buy a house. Your payment might be higher, but if you can afford that payment, you're not dealing with 20 offers. Sellers are willing to do seller concessions, seller credits, things like that. So it's not fully a buyer's market yet, but it's definitely shifted away from the seller's market it was over the last couple of years. So maybe payments higher, but you can actually get the house you want. So just something to keep in mind. I hope everybody has a great day. If you need anything at all, please do not hesitate to reach out. I'd be more than happy to help. Have a great day, guys.